Okay, the KSP just dropped almost 10%. We're talking an entire emerging market reset that literally forced a massive unwind in the HBM trade. It's a huge deal, so let's jump right into this explainer and break down exactly what just happened. First off, say hi to Loro. Cute, right? It's kind of a nice contrast to the absolute financial carnage we just witnessed over in Seoul. We're launching straight into the autopsy of this historic market anomaly because we really need to separate the underlying mechanics from all the noise. I mean, just look at this headline number. The broad market KOSPI index plummeted nearly 10%. Guys, that is a total system shock. It's urgent, it happened incredibly fast, and it demands an immediate breakdown. Now, to understand why it broke, look at the structure beneath the drop. Over 56% of the KOSPI's entire market cap was heavily concentrated in just two major tech giants, Samsung Electronics and SK Hynix. So the market wasn't broad at all. It was extremely top-heavy. And here is the absolutely crucial point. When capital exited just those two positions, it accounted for a massive 6.98 percentage point drag on the entire index. To put that into perspective, the broader market barely moved. The index didn't break because everything failed. It broke because the concentration broke. Let's trace this back to Domino 1, the macro policy reset. Check out the rapid succession of these triggers. On June 16th, the FOMC holds rates and actually revises the dot plot upward. Fast forward to June 22nd, and the 10-year Treasury yield hits 4.508%. Markets suddenly priced in zero probability of a rate cut. Then, on the 23rd, the MSCI inclusion fails. It was a brutal, synchronized squeeze in just one single week. As a result, the US dollar index breaks above 101. Higher yields naturally draw capital straight into dollar assets, and that surging dollar strength instantly eats into the converted return on emerging market positions. The math just changes overnight, right? Capital systematically gets pulled straight out of emerging markets like Korea. Which leads us to Domino 2, AI profitability and the HBM rotation. Right around the same time, markets start questioning the staggering cost structures behind AI. Microsoft warned about escalating price competition. SpaceX launched a $20 billion bond, laying bare the massive capital expenditure of its AI division. And Alphabet? They lost top AI researchers to OpenAI and Anthropic. 3 blaring alarms in one session. Suddenly, software valuations looked incredibly vulnerable. So what does capital do? It flees those software valuations. But it doesn't just disappear. It pours directly into what's seen as a physical hardware safe haven, high-bandwidth memory chips, or HBM, made by Samsung and SK Hynix. The logic here is simple. Hardware demand holds up no matter which AI software model ultimately wins the race. And SK Hynix captured this exact rotation perfectly. The stock surged over 5% during the Korean session, essentially front-running the massive US demand before New York even opened. But because of this, the HBM trade became instantly crowded and dangerously overextended. Now enter Domino 3, the broken catalyst. Here's the blunt fact. Korea failed its bid to be reclassified as an MSCI developed market. 5 accessibility criteria simply went unmet. So the earliest possible inclusion is now deferred all the way out to June 2028. Poof, the anticipated liquidity totally vanished. And this matters because foreign investors had aggressively pre-positioned ahead of the passive inflows they thought that upgrade would trigger. With the catalyst instantly vaporized, the exit was violent. Foreigners dumped 4.49 trillion won in spot selling, right at the absolute peak of that HBM rotation. And that brings us to Domino 4, the mechanical selling loop. This is where it becomes a ruthless, self-fulfilling cycle. Korean financial institutions issue a lot of equity-linked structured products. So, step 1, the index falls. Step 2, they are legally required to sell shares just to maintain their hedges. Step 3, this forced selling pushes the KOSPI even lower, which, you guessed it, requires even more selling. At this point, the machines literally took over. Program selling reached a staggering 4.6 trillion won, dropping futures over 5%. By 11:40 a.m., a sidecar was activated, halting program selling for 5 whole minutes just to let the system breathe. But wow, it wasn't enough to stop the algorithms. By 2:33 p.m., the index had dropped over 8% from the previous close. That was the ultimate breaking point. A full circuit breaker activated, halting all trading for 20 minutes and firmly cementing this as a historic crash.
But hold on, here is the twist: hidden directional signals.
Look at the massive divergence in this data. Yes, foreign investors sold 4.14 trillion won in the spot market, but look over at the futures column. They aggressively bought over 7,000 KOSPI 200 futures contracts. They sold spot to reduce their immediate exposure, sure, but they bought futures to retain their directional bet on Korea. They didn't actually leave the market. We see the exact same hidden signal over in the KOSPI. Foreign investors accumulated 254 billion won in HBM supply chain equipment names like Jusung Engineering. It was retail panic selling that actually drove those specific prices down. Meanwhile, the smart money was quietly buying the dip. So what's the takeaway here? The core hardware thesis remains entirely intact. The underlying fundamentals of the global AI infrastructure buildout haven't changed one bit. They were simply temporarily buried by a mechanical market error and a delayed index inclusion. You really have to look past the sea of red on the screen. Look at that futures accumulation and the equipment manufacturer buy-ups. The raw data tells a completely different story than the terrifying headlines you read. So I'll leave you with this provocative thought to consider. Was this a blind market panic, or was it a perfectly calculated institutional repositioning, executed right under the cover of chaos? If you want to spot these kinds of signals in the Asian market close before the New York Open even hits, make sure to subscribe to this explainer.